Good evening, everyone, and welcome to the UMA Alumni Association's March webinar, 5 Steps to Better Budgeting. My name is Caitlin, and I'm the Social Media Specialist here at UMA. Kyle Vangsness will be your speaker during today's webinar. Kyle is a team lead in the new Student Finance Department at UMA. He has worked in the Student Finance Department for over 2 years and works closely with our first-year students. He is currently majoring in economics at the University of South Florida, and today he'll be talking about how to create an effective budget to help you in achieving your financial goals. Before we begin, let's go over a few housekeeping items. To give you a quick breakdown of the webinar, Kyle will speak for roughly 15 minutes and leave an additional 15 minutes for the question and answer session. You can send your questions at any time in the questions box, and we'll collect them and address as many as possible at the end. If you experience audio issues during the webinar, we recommend exiting out of your current browser and opening up the webinar in a different browser. For example, close Chrome, open Internet Explorer. We also recommend closing out any of your other pages and applications to help the platform run as smooth as possible. We also wanted to let you know that you're muted to prevent noise interference during the webinar. So if you have a question, be sure to send it in the questions box since we can't hear you. Last but not least, the webinar is being recorded and will be sent to participants to view shortly after the webinar concludes. All right, now let's begin. Kyle, take it away.
Thanks, Caitlin. Well, I'm really excited to be here with all of you guys today to talk about one of my favorite topics, budgeting. Many people hear the word budget, and immediately the feeling of dread follows, but it doesn't have to be that way. Budgeting can be fun, and it can also help you achieve your goals. Today, I'll talk about how to find your lender information and understand your student loans. We'll talk about the difference between your gross and net income, how to calculate your fixed and variable expenses, ways you can develop a budget you can actually stick to, and how to set financial goals. Okay, let's get started. Before you can effectively budget, you need to become aware of where you stand financially. This generally involves reviewing your debts, such as student loans, mortgages, and auto loans. Taking the first step into understanding and calculating your debt can be scary. However, there are many ways that you can start. A great way to dive into budgeting would be to visit the National Student Loan Database, or otherwise known as NSLDS. You can visit this website online at nslds.ed.gov. This will provide you with your aggregate student loan debt information and your lender's contact information. For students that are in the repayment period, having knowledge of this information is especially important. UMA has a financial literacy services department that offers loan counseling for graduate students to ensure that they are educated on the repayment process, as well as the options that are available to them. You can reach our financial literacy services team at 877-305-3065. If you currently have any student loan debt, I encourage you to visit this website and reach out to UMA's financial literacy team. They can help you get to know where you stand financially and familiarize yourself with your lender's information. It's also a good idea to know where your credit stands before you start implementing a new budget. Your credit report contains important financial information such as payment history, your credit score, and your debt information. Reviewing your credit report will help you better understand your financial situation and help you catch any potential errors. As you look over your credit report, if you do find anything unusual, you should immediately notify the credit bureau. By researching debts, you've already taken the first step towards creating an effective budget. Visit annualcreditreport.com to review your credit report. It's important to find a method of recording that works best for you. Although there are websites and apps that can help track income and expenses, Microsoft can be a useful resource too. The key is to remain consistent with accurately logging every transaction in a readily available place. We've created a budget sheet template that can help you with budgeting. You can choose between a daily or monthly budget template, or you can choose to use both. We've provided a website here that you can look at to download these templates. And on the next few slides, we'll take a look at these templates. Here's a monthly transaction log template that can help you track all of your expenses. You fill in the box and you can leave yourself with notes with an explanation of each expense. This will help you evaluate your expenses in the future and see where you can make improvements in your budget. This is an example of how to log your transactions using our online Excel template. You easily see the date of transaction. You can see the cost, form of payment, the category the expense falls in your budget, what the item is, who the money went to, and you can also see the notes we've left for rent and movies. Every single purchase that you make should be logged in this format. You can also see a bar graph here that will populate when you enter the information on the right-hand side, so you can have an actual visual of where your money is going. When recording your income, you want to make sure that you're referring to your net income instead of your gross income. This is because your net income reflects the funds that are readily available to you for use by excluding deductions such as taxes and health insurance. It's best to refer to a pay stub to see how much income you bring home monthly. The next step is to record your fixed expenses. Fixed expenses are expenses that remain the same every month. Since they do not change monthly, they can be easy to keep track of as well as record. Some examples of a fixed expense would be rent, insurance, and loan payments. And finally, you want to log your variable expenses. Variable expenses are expenses that change monthly depending upon usage. Some examples of a variable expense would be dining out, gas, clothing, or entertainment. Recording variable expenses can be a little more difficult than fixed expenses, so it's best to do this as soon as you make the transaction. Now that you've researched any acquired debt and recorded your income and expenses, the next step is to develop a budgeting strategy that actually works for you. Although one strategy may differ from another, they generally abide by the same principle. They separate your needs from your wants from your savings. A basic budget contains proportional guidelines that allow you to make informed decisions on where you spend your money. The 50-30-20 rule is a common budgeting plan that allows 50% of your income to go towards your needs, such as housing, transportation, insurance, and groceries. 30% of your income goes towards your wants, such as concert tickets, dining out, and 20% of your income goes towards saving accounts and paying off debt. You can tailor these percentages to fit your lifestyle, but this is a great place to start when first learning how to budget. For a budget to be effective, it first needs to be financially possible. If your expenses are greater than what your budgeting guideline allows, you may want to research the methods of reducing monthly payments. By doing this, you're effectively managing your expenses in a way that allows you to be successful, and stay within the rules of your budget. Here we provided just a few of the many repayment options that may be applicable to you. To determine which plan you may qualify for, you can visit the studentaid.ed.gov website, as it offers plenty of information on student loans and the repayment process. One method of reducing your monthly student loan payments is an income-based repayment plan. Speaking to your lender about repayment options will ensure you are on a repayment plan that reflects what you can actually afford. Another strategy of reducing monthly payments would be to consolidate your loans. The idea of consolidation is to merge your debts together into one loan that contains an overall lower interest rate. This also is dependent on many factors, so the results may vary from one individual to another. And a third option is to research loan forgiveness programs. One program may require different criteria than another in order for one to qualify, so it's best to read up on the programs that may pertain to you specifically. So once you develop a budgeting strategy, you can now set financial goals. The acronym SMART is an evaluation system that allows you to base your goals from certain criteria. Let's take a look on the diagram on the next slide and see what each letter represents. So you can see here that S stands for specific. You should provide a clear description of what you want to achieve. This should help you know where you're going before you actually get there. M stands for measurable. Include a metric with the target that will help you measure your success in reaching your goal. For example, if you're saving for an emergency fund, you should set a target amount so you can track your progress. Next is A, which is for achievable. This is to set challenging targets, but also keep them realistic. You don't want to set your goal to make it too easy or too hard to accomplish. Next, R stands for relevant. You should keep your goal consistent with higher level goals. And this means to make sure that they align with what you truly want out of life. And finally, T is for time bound. Be sure to set a date for when your goal needs to be achieved. This should correlate with both M and A, meaning that the date should both be calculated and possible. Once you've thought about this process, you want to write out each goal in a format that answers all 5 of the criteria by asking yourself these questions. Is your goal specific enough to evaluate progress? Have you calculated how long it'll take to achieve? And does it relate to what you want out of life? Asking yourself these questions will allow you to decide if you've set an effective goal or not. Some goals may be to dissolve your debt, save for an emergency, or build a retirement fund. When your goals follow the SMART structure, you can easily evaluate if you're on track to meet your goals. The idea is not to budget in a way that removes your happiness from your life, but to track your money so that you can live comfortably and still do the things you enjoy. Knowing that you've created a working budget plan allows you to not feel guilty about your purchases because you know you're living within your means. In order to stay on track, it's essential that you continually and accurately log your transactions. Many major banks offer mobile banking applications that make it easy to review all of your transactions in one place. You want to regularly log this information into a budget template. The physical act of inputting transactions can help you to remain conscious of your current balances. Although budgeting can help you plan out your future, life can throw unexpected events at you. When the inevitable happens, it's important to adjust your budget as needed rather than just give up. You may find that you've gone over budget one month due to a sudden event, a medical emergency, or any other unforeseeable circumstance. When this happens, just try to adjust your spending in the following months to make up for that loss, and always remember to stay disciplined. As you evaluate how you are spending your money from month to month, you may begin to notice some of your spending patterns. This is a great time to ask yourself if you're properly handling your money, as well as if there are ways that you can actually improve your spending habits. You can list some of your spending patterns that can be reduced or removed completely from your budget, which will help you to follow it more efficiently. This can mean cutting down on the frequency you dine out or minimize small daily purchases such as your morning coffee. Well, before we move into our Q&A portion of this webinar, let's summarize the 5 steps that we've covered today. The 5 steps to better budgeting are: first, become aware of your current financial situation by researching your lender and creditor information and record the balances. The next step is to record your monthly net income and your fixed and variable expenses. You then want to develop a budgeting strategy such as the 50-30-20 rule we talked about, and research potential methods of reducing your monthly payments. You then want to set smart financial goals, and those are specific, measurable, achievable, relevant, and time-based. Once you've set these goals, finally, you want to track your progress to ensure that you're continuously working towards your goals, and then you want to evaluate where there may be areas of improvement.
Okay, that was awesome, Kyle. Thank you so much for all this valuable information. We really appreciate you sharing your insights with us about how to effectively budget. Okay, so now it's time for our question and answer portion of the webinar. So please submit your questions into the question box, and we will answer as many as possible. We have a couple coming in, but we could always use more, guys. Send in more right now. All right, so the first question: what are some examples of fixed and variable expenses?
So that's a great question. Again, let's go over the definition of the two. Your fixed expenses are going to be expenses that are not changing from month to month. They're remaining consistent. So some examples of these, some have been mentioned, but we have rent, there's property tax, utilities may not change, insurance, auto loans, and phone bills. Now, variable expenses, on the other hand, are expenses that are going to change or fluctuate on you. And generally, they're going to change based upon usage. Electric bills may change on you depending on the season. Your water bill may change, or even purchases such as clothing or your car maintenance can all fall under that variable expense category.
Okay, awesome. So I keep getting a question asking what the website was for the budgeting templates. Just so you guys know, this webinar will be sent out to your emails, so you'll have it in your emails as well. But for now, the budgeting templates can be found on umanow.com/budgeting. So again, umanow.com/budgeting. Okay, next question. How do I get information about loan forgiveness?
So another great question, and something I definitely recommend anyone that has student loans to look into. Now, student loan forgiveness, it depends on the person, I guess. And I don't want to talk about loan forgiveness because I may not know the exact situation, but by visiting studentaid.ed.gov, you can look at plenty of information that may pertain to you. I'll give you that again. It's studentaid.ed.gov. Now, if you don't want to go to the website, there's also an info center where you can reach out to the number 1-855-265-4038.
Okay, great. All right. How do I budget for one-time expenses?
One-time expense.
For one-time expense, I'm sorry.
Okay. Another great question. So a one-time expense, it's always best to factor them beforehand. It's something that you may not want to make impulsively. Now, most savers know this as an emergency fund. It's standard practice would be to set aside 3 to maybe 6 months of your income. And what this is really getting at is budgeting is all about planning ahead. So making those one-time expenses is something that maybe should have been thought about earlier on so you can save up and you know it's actually possible and you can financially make that purchase.
Yeah, couldn't that be a part of their 20% and the 50-30-20?
Perfect, yeah.
Okay, awesome.
That would apply towards the 20%.
Perfect. So it would come out of your 20% fund. Okay, next question. What happens if I mess up my budget and end up not following it? Do you have any tips to get me back on track?
So, again, this happens to, I would say, majority of the people that set budgets. Life is always going to throw things at you, and you want to follow a budget as much as you can. However, there will be those times where you can't. So you go over budget 1 month. What you want to do is make sure you you want to adjust the spending in the following months to make up what you would have lost. So you can set a goal to make back what you've lost and then calculate how much you can reduce your spending in the following months. Now, that applies directly to making a SMART goal because you can specifically make a goal of how much you want to make back and then track how long it's going to take you to make that back as well. And by the time you achieve that goal, you should be back on your budget.
Cool. Okay. How do I find lender information?
Okay, great question as well. And another thing that I recommend that everyone looks into, you want to have this information handy and logged somewhere. So write it down when you do have it. But your lender information can be accessed through the NSLDS website. Again, it's nsLDS.ed.gov.
Okay, perfect.
Mm-hmm.
And what is the grace period for student loan payback at UMA?
Okay, a great question that I am asked actually a lot. So to answer this in 2 ways here, a grace period regarding UMA, if you're talking about loans that are owed towards UMA, we have a student accounts department here that can work with you, and you would have signed an agreement regarding a loan term on that loan that would be to UMA. But to take it out, broader step, a direct loan that comes through the FAFSA, that basically what I'm saying is your student loans, the grace period for that would be 6 months. And that time would start from your date of withdrawal from school, or your graduation date, or the time you fall below half-time enrollment. So any of those 3 dates would begin your grace period, which would extend for 6 months. And then after that 6-month period, you would go into your repayment period.
Okay. Okay. Can I start paying monthly for my student loans before graduating college?
Another great question, and I love this question. Don't feel like you can't pay on your student loan debt while you're enrolled. That's something that we 100% encourage because your student loans are going to have interest rates on them. And by paying on your loans while you're in school, you're keeping those loans from capitalizing and accruing that interest on you. So by all means, if paying on your student loans is something you can fit within your budget, even though you're not required to pay back yet, I 100% recommend that, yes.
Okay, and should I get all 3 credit reports for the major credit bureaus each year?
So a great question. Yeah, your credit report affects a lot in life for you. I know there's the Equifax and TransUnion that are the biggest creditors out there. I think staying up to date on your credit is especially important. The website that we provided, I would say if you go to, does give you multiple credit reports. So the answer here is yes, and I would say do this more often than once a year. I would say even once a month, because things are constantly being reported to your on your credit report. So you want to keep up to date on that and make sure everything's being accurately logged there.
Okay. Okay, so this is our last question. What is an example of a SMART goal?
Okay, another great question. So again, let's just talk about what each letter stands for. So it's a specific, measurable, achievable, relevant, and time-based goal. So what we're getting at here is it's a way where you can track your goals and make them specific so you know if you're on track or not. An example here would be telling yourself that you're going to save $1,200 by this September if we're setting this goal now. That would mean you could track it by knowing if you're putting $200 away a month. And you look 3 months from now, if you haven't had the $600 saved, you're not on track to reach that goal. Another SMART goal, or an example of one, would be telling yourself that you'll pay your credit card debt down to $0 by 2020. And again, you want to make sure you can calculate that out monthly and fit it within your budget to know that's a feasible goal. But if it is, that right there would be another SMART goal.
Awesome. All right, guys. Well, that's all the time we have for today. If you still have any questions, please email social@ultimatemedical.edu. It's up on the screen there, and we will connect you with Kyle to answer the rest of your questions. And as always, if you ever need any career services assistance from your advisor, please call the number listed on the screen. That's 866-473-9391, and we'd be happy to help you with anything you may need. And thanks again, Kyle, for joining us. This was really great.
Thank you.
We hope you all enjoyed this webinar. We wish you the best of luck in your budgeting. Have a good night.